This video I want to look at the power of compound interest, the power of compounding when it comes to investing. So we're going to take a look here firstly at how compound interest works, and then I'm going to have a quick look at some of the share investments that I bought over the last few years, and you'll see the types of return that you might be able to get if you do a bit of research and a bit of fundamental research, and you get a bit of luck as well, and you can read the market, not read the market, but you get a feel for what's going on in a macroeconomic sense. But firstly, just in relation to doubling your investment, doubling your money every 7 years or thereabouts. Here's a compound interest calculator. Let's, for the sake of argument, say we're going to invest 10,000 euros or dollars or whatever. So we're putting in 10,000 into this calculator. We're going to give it 7 years to grow. We want to see what it's like after 7 years. And the interest rate is going to be 10% per annum. So we're looking at a compound interest calculation. What do we get at the end of 7 years with an interest rate or return on our investment of 10% per annum? If we calculate here, you see the figure is 19,487.17. So you might be saying, that's all very well, but how do I get a return of 9 or 10% per annum? Well, in fact, the S&P 500, the Standard & Poor's 500 share index over the last 50 or 60 years has actually returned in excess of 9% gross per annum. So it's not all that difficult if you do a bit of research and have some sort of a feel for investments and so on. Now I want to show you one here, a screenshot of my this one. So here's a fund that I started, and I started it only in today or yesterday. It was the 25th of November. I started this fund in June. It's with Davy Stockbrokers. It's a number of UK shares. I believe UK shares are very good value at the moment. But over here on the left hand side you can see what the shares are. Barclays Banks, BP, Datalex, that's an Irish company, HSBC, that's a bank, Lloyds Banks. But over here then on the right hand side you see the gains or the losses. And remember, I only started this in July of 2020 and this is November 2020, and here are the gains for each of the shares. So bottom line is, all of the shares have shown a gain, apart from this one, that's GlaxoSmithKline, and that's down 15%, but everything else is showing a healthy return. But my overall return, as you can see here, is 27.22%, and that's only in about 3 months. So whether I can maintain that sort of growth over the course of 12 months or 5 years or whatever remains to be seen. Probably not, but I only need 10% in order to double my money every 7 years. And if we take a look at another screenshot I've taken here, this one. So this is a different group of shares. This is shares I have in a US market, and you'll see here on the left hand side the shares themselves. So it's a mixture of Irish companies like Kingspan, Snapchat, Amazon, Twitter, Alibaba, Alphabet, that's Google, Smurfit, Ryanair, Kerry Group, CRH, and so on. But over here on the right hand side, this is for about 3 years, and this is the return I've got over the last 3 years. 228% on Snapchat, 77%, and so on. As you can see down here, all of the greens are obviously positive returns and the reds are negative. So inevitably in any basket of shares and in any investment, you're going to have winners and you're going to have losers. But you don't actually have to be right over 50% of the time when you buy shares. All you need is a few really good ones, because the ones which appreciate very significantly in value, for example Snapchat or Kingspan or Amazon or Twitter or Alphabet, that's Google, those types of shares which show really good growth will actually cover up and carry the ones that have gone down the tubes, quite frankly. So that's, I hope you get a sense for the value of compound interest and the power of compound interest, and when it comes to calculating returns and so forth, always consider the power of compound interest. And you can get a compound interest calculator online very, very easily. This simple example here is 20 grand or 10 grand rather, initial principal, 7 years, 10% per annum, and I've doubled my money. So if I double my money every 7 years at a rate of 10% per annum, that's fairly good going. And you know, obviously, in terms of investing, whether you're going to invest in property or going to invest in shares or whatever you're going to invest in, never overlook the power of compound interest, and a small, steady, incremental increase every year, year on year, compound interest will turn that increase into a nice, very nice return for you over the long haul. Hope you find this video useful. If you do, I would appreciate if you gave it the thumbs up down below. Thanks a lot.